Hey, this is Justin with DayTradeTheMarkets.com on the 27th, and I wanted to take a look at that explosive rally midday in the ES and talk specifically about some opportunities to get in. You may have seen the last couple videos we did, one about the building blocks and the other about the sell-off and some of the clues to the sell-off. And I got an email from somebody the other day after the video where I showed the aggression bars, showing how it was giving us really good clues to the sell-off a couple days ago. And he said, "Dad, that's great. You know, it's good to know when the market's going one way or the other, but you know, where do you get in?" And so I thought I would address that today and also give an offer to kind of look behind the scenes at some of our training, at some of our trade entry ideas. But start that with the concept that we really focus on first. That's the opposite of how most people trade, and that is that you want to identify and be able to put the market in context first. So be able to identify the direction, the likely direction, know that you have an edge on which way the market's likely headed. If you have that, then you have what we call time on your side, but you can also then hone in on some good trade entry locations. So what I thought I would do is take off, you know, most of the components of the software and just focus in on the aggression bars and the high velocity moves today, and talk about a few trade entry ideas. So let me do that now. Okay, so I've removed the support resistance zones, I've removed the deceleration, I've just left on the aggression bars, high velocity moves. And what we saw early on, the first couple hours, 2.5 hours of trading, is we had nothing. We had nothing but level 1 buying and selling aggression bars. And level 1s are interesting. I look at those as, you know, interesting. They can help you manage a trade, but you're certainly not going to want to base trade entry or make too much of a determination on what's going on in the market based on level 1 bars. And obviously the market just chopped around for the first couple hours. Now the first major evidence that we had, however, was this high velocity move and level 3 selling bar right here. I know that I've got the chart kind of compressed, but you can see that. And what we look at when we see these, especially when we're against the intraday bias, bigger picture bias. So in other words, heading into the day, one of our building blocks is the bigger picture bias, and all things equal, we'd like to be in line with that bias, and the bias was heading up. So we had this level 3 selling aggression bar and also this high velocity move box that you can see there that was made by sellers. What we want to look at in that situation is, do we get follow through or do we get rejection? And you can see that the low of this bar, it's a little hard to see, but the low of that bar, we never got a full bar below. That's kind of the first benchmark that we look for. Did we get a full bar below that bar? And you can see that we didn't. And so that's a pretty good sign of rejection, especially in the context of that bigger picture up auction. And then you can see we have another attempt when we tested the high of this bar. We had a level 2 selling bar. That one couldn't even take out the low of that bar and got rejected. Then you can see we had plenty of action above this bar, these two bars, a full bar below the second bar there. And then we had a level 2 buying aggression bar. And then as we're making new highs on the day, we have a level 3 buying aggression bar. So with the bigger picture bias, level 3 buying aggression bar on a breakout, that's an opportunity for what we call a breakout trade. Okay, so again, the idea for the breakout trade is if you have a level 3 buying or selling bar, in this case a level 3 buying bar on the high of the day, or if we would have had a level 3 selling bar on the low of the day as we're making new lows, you just kind of jump on board. And that's especially true with context of the bigger picture up auction. So that's one opportunity. And again, if you're interested in seeing some more of our actual opportunities or trade entry ideas, just send me an email. I'll send a couple pages of our training manual over. You can study that. Another possible opportunity is what we call a level 3 reversal trade, where we had this level 3 bar. It got rejected. We didn't even get a full bar below. Once it got rejected, then you're looking to get on board toward the high of that bar right in this area. Okay, so that's one opportunity. The second opportunity was this level 3 breakout trade. Here's another potential breakout trade, but another opportunity with that, because it wasn't we're kind of still within this same vertical move, is what we call our level 3 continuation trade. And that's a situation where you can see we have this level 3 bar. We get immediate follow through, a full bar above. Didn't even come close to testing the low, which is our first expectation. So then the idea would be to put a limit order in at the high of this bar, and you can see that touched it to the tick a few times before having another rally. So that's another opportunity. But again, the key being, number one, we've identified direction. We're pretty solid on direction because heading into the day, our bigger picture bias was up. And then our structure, we had a rejection of this, and then we just have follow through on these buying bars. So all of our intraday or during the day structures is very bullish. So we're looking for ways to get long into the market. Okay, and as I said before, the first opportunity was this reversal trade. The second opportunity was this breakout trade. The third opportunity was this level 3 continuation trade. Now here's another level 3 bar, but instead you can see that on this bar we didn't have the immediate follow through. You can see that compared to this bar here, where on the very next bar we took out the high, and then the very next bar after that we had a full bar above. Okay, on this bar we did not take out the high, and then we tested back toward the low. Well, that's where our level 3 retracement trade, I should say, comes into play, where we're looking with our first expectation being that we're looking for the low of that bar to hold, and you can see that it held to the tick nicely. So, you know, right there are 4 potential trade opportunities, which kind of the key to trading with this software is we've got these trade opportunities, and again, just send me an email if you want to take a look at some of those. But your first job, and this is something that we teach day after day, your first job is to try to understand what the likely direction of the market is. So to recap, one piece of evidence is our bigger picture bias, which was up. Second piece of evidence was that all of our major structure, level 2 and level 3 bars, in this case the two selling level, the level 3 selling bar and the level 2 selling bar, got rejected, so that's kind of a victory or some structure for the bulls. And then all of our level 2 and level 3 buying bars had follow through, which is kind of a victory or some structure for the bulls. So all signs are pointing to the market heading up. So then we want to figure out how do we get in. And like I said, there were 4 different trade opportunities that would have worked out very nicely depending on how you decided to trade that in your style and how aggressive or conservative you might be. So hopefully that makes some sense. I just wanted to kind of address that question we got from somebody the other day, because I'm sure, you know, when there's one question, typically other people feel the same way. So let me know if that makes sense, or if that raised other questions for you as well. And we'll go from there. Hope you have a great Friday, and we'll talk to you soon. Thanks.